Hey traders, thanks for hopping in here today. Hope you guys are having a great weekend. I didn't want to waste any time this weekend. I wanted to talk about a subject that advanced traders and novice traders both have a difficult time coming to grips with, and that is, should you have a daily goal or not? And now I know there's going to be people that are going to disagree with me because this is a controversial topic, and that's okay. I'm up for discussion. Everything I say in this video is just all my personal opinion. But should you have a daily goal? I do think you should have a daily goal, but should you have a daily profit target? I don't know about that. There are some traders who've been trading for even decades who do have a daily profit target, have a daily goal. It's something that I don't quite understand. Personally, I believe that you need to just make yourself available to the market conditions every day, and if an opportunity presents itself, you're there and you're ready to hop onto it. But a daily profit target, Let's go to the next slide. I don't think you should have a profit target. But like I just said, I think you should make yourself available to the opportunities as they present themselves, but not forcing opportunities to be there. And that's something I struggled with this summer because last summer the market was hot and that was my first summer trading. And this summer it was very slow. I mean, it was really slow. And in July and August both, I didn't do very well. And I was trying to trade in a market that wasn't there. I wanted the market to be hot, and I was actually over trading some. And that's why I started lowering my share size to accommodate the market conditions. But I do not think you should have a daily profit target. This is just my personal opinion. I don't think you should have a daily profit target. I think you should have a daily goal, though. And I'll get into that a little bit more as we go into this PowerPoint, and I think it'll become clear to you. Let's go to the next slide. This is a quote by Mark Douglas. He wrote an incredible book. You guys need to read it if you haven't. This is a quote from him. Most people are flexible in their rules and rigid in their expectations, but you need to be rigid in your rules and flexible in your expectations. And I do see this a lot of times with most people. They're very rigid in their expectations, thinking, okay, I'm going to become a millionaire this year. Just thinking they're going to get rich quick type of deal. They're very rigid in what they expect, but they're very flexible with their rules. So if a stock crashes on them, they end up holding it, adjusting their risk parameters, so they'll add to their loss and then add to their loss, and then it just snowballs down, down, down there. They end up blowing their accounts. I see this happen all the time. They don't have their mind properly set before they enter a trade, predefining their risk. All they see is a lot of money. All they see is just a ton of money down the line. Mark Douglas is saying here that you have to be rigid in your rules, flexible in your expectations. Be very rigid in your rules. And I'm going to go over a few rules here that I think you guys should have that should be a daily goal, not profits. Not profits at all. Gamblers focus on profits. Traders focus on risk management. You need to be focused on your risk. Predefine your risk before you enter a trade. Just don't be thinking about how much money you're going to make. Because there have been times, guys, where I wake up and I come sit down in my chair ready to trade, and I'll make $1,000 in a day. And I wasn't expecting that at all. And then some days, I think the most I've lost on a trade is between 300 and 400. And obviously, those days I'm expecting to make money. I'm not thinking I'm going to be losing money. But you just present yourselves to the market and trade what the market gives you. Don't try to force a trade just to meet some type of profit goal or quota. Let's go to the next point. What should your daily goal be? Your daily goal should be to come sit down at your seat, watch the market, find the best stocks of the day, find the setups. If there's a technical breakout, if there's a bull flag, ascending triangle, if you're a short seller and you're double topping your daily resistance, then take the opportunities. But don't just force them. What do I mean by this? Even if that means taking a loss on a good setup. So a daily goal, in my eyes, could mean a red day as well. A daily goal could mean a small red day. You cut your losses quick. So let's say you're actually waiting for a good setup. You wait for a bull flag to form. You see it. It's presented itself, and then you hop on the opportunity. Bull flags are not 100% going to work out, but you have, it's arguable, but about a 70% chance that a bull flag is going to break out. But let's just say the bull flag doesn't work out. It breaks out of the bull flag, and then it ends up being a fake out breakout, which does happen. But you cut your losses quick. You take a very minimal loss. Let's say you were trying to make about $300 on that trade is what the chart was telling you, and you end up taking a $100 loss. That's a good trade. That is a good trade. Even though you lost $100, your risk reward was set in place for you to have a 3-to-1 risk reward And more times than not, that trade's going to work and you're going to be profitable. But let's say you don't cut your loss quick, and then you end up adding to your position, averaging down on the trade, and then the stock keeps going down, down. You're just losing more and more money. You end up losing $500 or $600 when your profit target on that trade was about $300. That's an awful trade. You're going to blow up your account eventually. That's what I mean by a daily goal, even if that includes a red day. If you trade a good setup and your risk reward is in place for a 2-to-1, 3-to-1, 4-to-1, you end up losing just a third or a fourth of what your profit target was, then that's a good trade. It's a good daily goal to have, even if it's a red day. Next slide. Have a max loss set in place on the day. So if you're averaging about $200 or $300 on a day, if that trade itself on the bull flag was about a $300 trade and you take a $100 loss, walk away or consider only having about one more trade left, and then be done for the day. Don't just let your trade snowball. If you lose and you try to want to make that money back, over trade to compensate for your losses, you just have your losses on your mind and you're trying to make that back. That's what happens a lot of times. That's why the SEC governed a rule in place for you, for the PDT rule, for you only have a set number of trades a week because so many people are blowing up their accounts. That's why a lot of people go overshore with their accounts and end up blowing those up. Thankfully, I waited about 2 years to open up my offshore account, and I haven't blown it up yet. But that is a reason the SEC put that rule in place. People were over trading. The emotions are what get most people. So you need to have a max loss set on the day. If you're averaging, you can go through your trades and see what you're averaging per day. If you're averaging $50 a day, have a $25 max loss. If you're averaging $100 a day, $50. If you're averaging $1,000 a day, have a $500 max loss. You just need to make sure your max loss is in place for consistent growth, because if you're losing a lot more than you're winning, you're doomed for failure. You need to have a good max loss set in place. Also, another good rule which I've found being offshore is have a set number of red trades you're willing to take. For me, I don't like to take more than 2 red trades. If I have 2 red trades in a row, I want to be done for the day. When I lose 2 trades in a row, that means the market's telling me, today's not my day, so walk away. Now, if I have a lot of winning trades in a row, keep winning until I have a red trade and then walk away. Now, there's different rules you need to set in place for yourself, and you need to be rigid with these rules. So find yourself out, feel yourself out, just understand yourself better than anyone. Go through your trades, write down, journal your emotions, just understand yourself better than anyone else, and then set rules in place for yourself, because there's no one else that is going to set rules for you other than you. And you need to be rigid with these rules. As Mark Douglas said, be rigid with the rules, flexible with your expectations, because if you're expecting to come to the market and make hundreds and thousands of dollars every day, that in itself to me is setting yourself up for failure. That's my personal opinion. Some of you may think different, and that's fine, but respectfully, that's my position. That's how I feel as of this point in my trading journey. So your risk reward needs to be offset by at least 2-to-1, 2-to-1, 3-to-1, even better. 3-to-1 is really good. So if you average about $300 a day, walk away with a $100 loss. Just set yourself up in place for success. And this risk reward needs to not just be in set for the day, but on every single trade. Every single trade, predefine your risk. And if the bull flag is setting up and you want to buy the breakout, and that ends up working out and you make $300, then great. If it is a fake out breakout, make sure to cut your losses quick and cut with a $100 loss. To me, this is probably the only goal you need to have. Be very rigid with this one. I really do believe that. Be very rigid with a max loss on the day. I do think this is probably the most important rule to have. And this video, I know, is kind of strange because it's focusing on losses more than it is profits. But as a trader, you have to be more focused on your risk management than you do your profit. The profit's going to come, guys. The profit is going to come. You just have to be focused on your risk management, predefining your risk before every trade, your risk reward on every trade. It's all about risk. That's what it's about. It's not about thinking about profits, and just, money just falling from heaven onto me. No, that's not what's going to set you up for success as a trader. This will prevent overtrading and losing more than anticipated. When you lose on a trade and you're red on the day, but you're only red $100, you were risking $100, and your reward was $300, then that's a great trade. That's a great day. It's a great loss. It really is. That can be a daily goal, even if you're losing. I lost $100 today on a great setup. The opportunity presented itself. I took it. I didn't just I didn't overtrade. I didn't trade what the market wasn't telling me to do. I traded a nice setup. I lost. I didn't overtrade. That's great. That's a great day. I feel like, that is a daily goal you can have. It really is. That's a target that was hit. Even if it's a red day, you can feel good about that day because not every day is going to be green. There's no one out there who has every day as a green day. It doesn't happen. So just try to separate yourself from that euphoric way of thinking that's just a complete fantasy. Next slide. This is in conclusion. Personally, I would not have a daily profit target that I aim to meet. That's me personally. I've had an account open for a year and a half now. I've been studying for over 2 years, and so far on this trading journey, I would not have a daily profit target that I aim to meet. I would have a max loss in place, so I'd be focusing on risk. I would predefine my risk before every trade. That's the type of daily goal I want to have. Not going against my risk that I've predefined. And then remember, this is important, remember that gamblers have their eyes set on profits. It's all they see. They come to the market and all they see is money. Whereas day traders, successful traders, have their eyes focused on risk management. Thank you guys so much for watching. If you haven't yet, go ahead and hit that subscribe button. We'll see you Tuesday.